Alright, let's talk about cryptocurrency. It's that digital money that your weird cousin keeps trying to explain at Thanksgiving, using words like blockchain and decentralization while you nod along, just hoping he doesn't ask you to invest in his new cat-themed coin. Now, in this already chaotic world, two very loud, very online personalities have become its unlikely puppet masters. Donald Trump, a former and current president who once seemed to hate crypto, and Elon Musk, the tech billionaire who treats the market like his personal toy. Both are men who can move billions of dollars with a single post, turning the already volatile crypto market into a veritable roller coaster of financial anxiety. In one corner you have Donald Trump, a man whose name is literally plastered on buildings, stakes, and now even digital coins. He's the 45th and 47th president of the United States, a real estate mogul turned reality TV star turned political phenomenon. For years he was a crypto skeptic, calling it a scam and something based on thin air. But like his stance on many things, that has dramatically changed. Now he's not just a supporter, he's a participant, launching his own line of digital collectibles and meme coins, making him a fascinatingly direct player in the game he once scorned. This isn't just a policy shift, it's a full-on business venture, blurring lines in a way only he can. In the other corner we have Elon Musk, the CEO of Tesla and SpaceX and the owner of the platform formerly known as Twitter, now called X. He's the eccentric genius who wants to put computer chips in our brains and colonize Mars. Musk's relationship with crypto is legendary. He can tweet a picture of his dog, and a currency originally created as a joke, Dogecoin, can see its value soar to unimaginable heights. His influence is so potent that the crypto community has a name for it, the Musk effect. He's the market's unpredictable hype man whose casual musings can create fortunes or wipe them out in the time it takes to send a tweet. The core issue here is that the words and actions of these two individuals have a direct, immediate, and often dramatic impact on the financial well-being of millions of people. When Trump feuds with Musk on social media, as we saw in early June 2025, the market doesn't just flinch, it convulses. Bitcoin's price tumbles, and hundreds of millions of dollars in investments are liquidated in a flash. Their public spats and policy announcements are no longer just political theater. They are seismic events in the digital economy, creating a landscape where a single sentence can unleash absolute financial chaos. Donald Trump's journey into the world of cryptocurrency is a masterclass in political and financial opportunism. It wasn't long ago that he was publicly denouncing Bitcoin, calling it a scam against the dollar and a threat to the nation's currency. He seemed to view it as a shadowy, unregulated competitor to the traditional financial system he knew. His administration expressed deep skepticism, and he personally tweeted that he was not a fan of these digital assets. For all intents and purposes, he was firmly in the anti-crypto camp, aligning with traditional financiers who viewed the technology with suspicion and disdain. This made his eventual pivot all the more shocking and frankly incredibly on brand. But then, something shifted. Perhaps seeing the growing enthusiasm among his base or recognizing a new, untapped market, Trump performed a complete U-turn. He went from crypto critic to its most powerful cheerleader, promising to make America the crypto capital of the world. During his current term, he has signed executive orders aimed at supporting the U.S. crypto industry and has fought against the creation of a central bank digital currency, or CBDC, which he frames as a tool for government overreach. He's positioned himself as the savior of digital assets, a champion for financial freedom against the encroaching forces of a bureaucratic state. It's a classic Trump move: find a parade and get in front of it. This transformation wasn't just about policy, it became deeply personal and highly profitable. Trump launched his own series of non-fungible tokens, or NFTs, digital trading cards depicting him as a superhero, an astronaut, and a cowboy. These sold out almost instantly, netting millions. Not stopping there, he has waded into the world of meme coins with tokens like the MAGA coin, Trump, gaining value based on his political movements. His own company, Trump Media, has even announced plans to invest in Bitcoin, directly tying his business empire's success to the crypto market's performance. This move has, quite rightly, raised a few eyebrows. The problem, and it's a big one, is the glaring conflict of interest. When a sitting president is not only setting national policy on an industry, but is also actively profiting from it through his own branded digital products, the line between governance and personal enrichment becomes dangerously blurry. critics argue that his pro-crypto stance is less about a genuine belief in the technology and more about cashing in on his political influence. He is, in effect, pumping a market from the Oval Office, creating a situation where his policy decisions could directly inflate the value of his own digital wallet, which is a situation that should make everyone, regardless of their political affiliation, a little bit uncomfortable. If Donald Trump's influence is a calculated business maneuver, Elon Musk's is a form of chaotic performance art. He is, without a doubt, the single most influential figure in the world of meme coins, a subgenre of crypto that thrives purely on internet culture and hype. His reign as the Doge Father began when he started tweeting about Dogecoin, a cryptocurrency created in 2013 as a joke featuring the face of a Shiba Inu dog. His seemingly random posts, from simple one-word endorsements to memes, would send the price of Doge rocketing upward. He single-handedly transformed a joke into a multi-billion-dollar asset, all through the power of his social media feed. Musk's influence isn't limited to just one meme coin. His actions have had a profound impact on the entire market, most notably with Bitcoin. In 2021, his electric car company, Tesla, announced it had purchased $1.5 billion worth of Bitcoin and would begin accepting it as payment. This news sent Bitcoin to a new all-time high, lending it a massive dose of corporate legitimacy. But just a few months later, Musk reversed course. Citing environmental concerns over Bitcoin mining, the market crashed. This whiplash-inducing series of events demonstrated just how much power he wielded. The fate of the world's largest cryptocurrency seemed to hang on his every decision. This phenomenon, dubbed the Musk effect, has essentially legitimized meme coins as a valid, albeit extremely risky, class of speculative assets. Before Musk, they were largely seen as niche internet jokes. But his constant engagement brought them into the mainstream, attracting millions of new, often inexperienced investors hoping to catch the next wave. He created a culture where the value of a coin is disconnected from its utility or technology, and is instead tied directly to its viral potential and the endorsement of a powerful influencer. It's a high-stakes game of internet clout, and he's the undisputed champion. However, this power comes with significant risks, especially for the assets he champions. As seen in 2025, Dogecoin's price has struggled, falling over 50% from its high earlier in the year. Its value is so tethered to Musk's public persona that any threat to his influence is a threat to the coin itself. His recent political feud with President Trump has introduced a new layer of vulnerability. If political pressure were to force Musk to distance himself from Dogecoin, the fragile confidence holding up its price could evaporate overnight, leaving countless investors holding a bag of what was, and perhaps always has been, just a joke. The combined influence of Trump and Musk has turned the crypto market into a theater of extreme volatility. When these two titans speak or tweet or feud, the market reacts with violent swings. We saw this clearly in early June 2025, when their public spat triggered a market downturn that led to over $300 million in liquidated long positions for Bitcoin alone. For professional traders, this volatility can be an opportunity to make quick profits. But for the average person, the retail investor who may have put their savings into crypto, these rapid price drops can be financially devastating. This is the core danger. Their influence fuels speculation, not stable long-term investment. On one hand, their involvement has undeniable benefits for the crypto space. Having a sitting US president and one of the world's most famous tech billionaires championing digital assets brings an unprecedented level of mainstream attention and legitimacy. It pulls cryptocurrency out of the obscure corners of the internet and places it squarely in the center of public conversation. This high-profile engagement can accelerate adoption, encouraging more people to learn about the technology and more businesses to integrate it into their operations. In a way, they are acting as a gateway, introducing millions to a new financial frontier, which could foster innovation and growth in the long run. However, this sword has a sharp other edge. The kind of attention they bring is often focused on the get-rich-quick aspect of crypto, not its underlying technological promise. This fosters a casino-like atmosphere where prices are driven by hype and social media trends rather than fundamentals. It can lead to classic pump-and-dump scenarios where influencers drive up the price of a coin only to sell off their holdings at the peak, leaving everyone else with worthless assets. Furthermore, Trump's direct financial involvement risks tainting the entire industry with accusations of corruption and cronyism, attracting negative regulatory scrutiny and damaging public perception. Ultimately, the influence of Trump and Musk on cryptocurrency is a perfect storm of opportunity and peril. For those who thrive on risk and can navigate the turbulent waters of speculation, their antics can present golden opportunities. But for those seeking stability or a fair and transparent market, their oversized impact represents a significant danger. Their every move reminds us that in the wild west of digital finance, the biggest players can change the rules of the game at a moment's notice. Whether you see them as visionary pioneers or reckless gamblers, one thing is certain: their chaos is now a fundamental feature of the crypto market.